Vroom vroom. Automobiles are making all the right noises. Let's find out how and why. Hello, I'm Dhruv Joshi, Research Analyst at Mirae Asset Sharekhan, and it's time for an insightful roundup of how this sector has performed in the last month. Our coverage universe surged by 22.9% year on year in monthly dispatches led by easing global headwinds, strong consumer demand, and resilient macroeconomic indicators. Commercial vehicles saw a bounce back after slower first 2 months in the quarter, while passenger vehicles saw an all-round growth across segments and markets. Premium and scooter-led franchises, including EVs, extended gains. With the West Asia crisis cooling off, correction in fuel prices, easing of supply chain and raw material prices concerns, along with strong domestic demand, all factors lead to a chance of positive traction for the growth of the automotive sector. Let's zoom in into the major developments. Most OEMs achieved double-digit growth, proving that supply chain constraints are firmly in the past and dealer inventory levels are being optimally managed to meet sustained demand across urban and rural corridors. While flat month-on-month growth underscores a stable demand baseline without any steep post-festive or cyclical drops. Vahan data depicts an overall growth of 21.6% year-on-year and 1% month-on-month in registrations for June 2026. Another factor for the high growth visibility is a weak June 2025, leading to a lower base. EVs, both two-wheelers and passenger vehicles, continue to grow with new model launches, fuel price volatility, and improving charging infrastructure. In commercial vehicles, dispatches were among the strongest performers in June, led by the pent-up demand in the M&HCV segment, reflecting aggressive infrastructure spending, rising industrial production, and healthy fleet replacement cycles. TMCV led this surge with a substantial 34.9% year-on-year growth and a 24% month-on-month growth. Ashok Leyland followed closely with an impressive 25.2% year-on-year increase and a sharp 28.6 month-on-month bounce to 19,194 units after a rough start to the year. Eicher Volvo also continued its steady upward trajectory, posting 29.3% year-on-year growth. The notable exception to this growing trend was of the bus sub-segment, which stayed soft across OEMs. Passenger vehicles delivered the sharpest growth in the auto complex, led by an SUV-UV heavy mix and a favorable base. TMPV grew by 69.4% year-on-year to 63,083 units. M&M Auto recorded an excellent 35.2% year-on-year expansion to 106,753 units. MSIL reported steady YOY growth of 19.3%, though it encountered a temporary MOM correction of 17.4%. Across the segment, domestic demand clearly outpaced exports in absolute contribution, while EV penetration, most visibly at Tata Motors, is emerging as a genuine share of mixed driver rather than a marginal add-on. The two-wheeler market showed divergent performance among key players. TVS Motors was the standout performer, growing significantly by 46.8% year-on-year, while Bajaj Auto maintained healthy momentum with a 28.4% year-on-year rise led by exports, reflecting continuing reliance on Africa, on Latin American markets, and its EV push through the Chetak. Eicher Royal Enfield grew 27.4% year-on-year. Conversely, Hero underperformed the broader market, slipping 2.3% year-on-year and 5.1% month-on-month to 541,000 units, suggesting intense competition in the entry-level commuter segment and slower inventory churn for the brand. Taken together, growth was concentrated in the premium motorcycles, scooters, and exports, while the price-sensitive entry-level commuter segment, Hero's Co, remained the segment's weak link. Finally, the tractor industry extended its growth streak into June. Escorts sold 13,695 tractors, up 19.1% year-on-year, with domestic sales rising 19.8% to 13,172 units and exports up a more modest 4.4% to 523 units. M&M sold 58,177 tractors domestically, up 12% year-on-year, with total volumes including exports at 59,935 units against 53,392 units a year ago, and export tractor sales up 8% to 1,758 units. These numbers signal an energetic start to the Kharif sowing season and a revitalized rural economy. but we remain cautious of the likely growth moderation as H2 base increases and due to the monsoon linked uncertainty. In a nutshell, the automobile sector continues to look strong in terms of growth and demand across all its subcategories. You can also now analyze the overall sector or even the leading companies individually on the Mirae Asset Sharekhan Research Center with in depth reports and more. To join the official WhatsApp channel, click on the link given in the description. Stay tuned for our next sector spotlight. Till then, happy investing.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.